Hi everybody, this is Murugan. Happy to present another interesting video. In this video, you will find a better way to trade with futures and options. This is not just gonna be an explainer video. Rather, we have just executed a real trade. We opened an option trading strategy for the month of April 2020, which we got close to a month of time. When I name the company, you will be surprised, which is a very high volatile stock in a given day. But there is a close to 4% return one can realistically expect from this particular stock, which got an accuracy close to 99% chance to make this money. So I'm sure you have to have some patience to understand what I'm really talking about as we move forward. Let me first introduce what is option trading strategy, because there are strategies which can be done through directional as well as non-directional. If you look at non-directional trading strategies, which are less returns oriented for the investment, and it involves theoretical calculations, and of course this is a very rare spot. There are mispriced option strategy, arbitrage, delta neutral, but we also have something called directional option trading strategies. When it comes to directional option trading strategies, it is optimized on a directional perspective. So you need to know where the market is really heading to, then you can achieve a good returns. But if you're wrong, still you lose less. But if you're right, you get a very good returns. And number two, it always look for a good returns for the risk taken. But the beauty of this particular strategy that it provides a reasonable returns on the investments what we make. So you might have heard of something like bull spread, bear spread, straddle, strangle, iron condor, butterfly. There are so many strategies, but the people are actually reluctant about this particular strategy because it involves capital and it is multi-leg, a tradable, execution risk. But this is a video which will tell you how to overcome all these things. And let me also share you something which we really traded when it comes to this strategy. So we have a two-step process by which we do it. Number one, directionally, if you want to be right, you need to know the current market trend. You need to understand the support and resistance of the stock. Either you get it through technical analysis or you get it through any of your directional practices. It is up to you. But what you have to arrive is the best case scenario, worst case scenario, and most likely case scenario. So the most likely case scenario should give you a reasonable confidence that you really expect. I think most of the time you should get it. At least you should be right by 50 times. If you're right at 40 times, so you should know your probability. Accordingly, you should optimize your trading strategy. Having understood the market direction, you have to make your choice of instrument. The choice of instrument is done by understanding the time availability and current volatility. So what you have to focus is the returns versus the risk. And number two is probability assessment. Number three is return on investment. Let me tell you one by one. Sometimes what happens, if I'm right, I get 100 rupees. If I'm wrong, I probably lose only 30 rupees. So I think anybody can say this is a wonderful strategy because it provides close to 3 to 3.3 times of the returns for the risk taken. But for such thing to happen, we have only 5% chance or 10% chance. Although it provides a good returns for the risk taken, the probability is so low. So when it comes to a good strategy, remember it should offer you a good returns for the risk taken, as well as it should be a high probable case. Only then it probably makes sense for us to invest upon that. And most importantly, sometimes the return on investment for the given time period may be very low. It makes people hesitate to execute such trading strategy. So whenever we come up with the trading strategy, it should have a reasonable returns for the risk taken and good probability assessment. And of course, it should carry a return on investment. Now, let me tell you an interesting trading strategy we come up with India Bulls Housing Finance. Today, 19th March 2020, the spot price is 87 as of closing, and we opened April expiry strategy. There is a lot of uncertainty around it. We understand that the name has gone for a toss along with S-Bank company, and of course, across world there is a pandemic. So because of coronavirus, so there is a lot of uncertainty about the bubble, a debt bubble which is expected, which will primarily hit the finance companies. So with all these things, what is our clue? So let me first take the charts. So those who are aware of India Bulls Housing Finance will not, disagree with my statement. It is very volatile. So you might have seen that the stock is actually close to 90% fall from its all-time high. Whereas if you look at the recent month, it is fell by around 60 to 70% from its near-time high. So it all happened in a matter of a month of time. So what is the cases expected? The current trend, I think no one deny this. The current trend is pretty much lower top, lower bottom. It is bearish. So what is my plan and how am I strategizing my trade? And I can also show you my real trade which got executed here. So let me first complete the directional expectations. So I just have one question for you people to think before we move forward. Remember, now the stock price is 89. The trend is pretty much bearish. I'm not denying there is a recovery. But if at all, if there is a recovery, where do you see the market to go? If you ask me, the market can actually have a recovery. There is a strong resistance expected at 166. But with a high volatile case for 1 month of period, with all these gaps are all there, although any recovery, I am expecting some reasonable supply to come. So the chances for the market to go up and withstand is very less. So when I have a scenario like this, I love to write some options to take the time value, but the volatility is against this. So any options which I write on the upside, remember any recovery will put a lot of pressure on my risk. So if I take 5 rupees premium by writing options, deep out of the money options, any recovery from here, which will actually trouble my MTM. So I want to write some options and I want to partially hedge that. So my question to you is, from 89, if at all, if a price goes up, my question is how far it can go up in a 1 month. For that, take the previous history. I think sometime back, the stock got an experience of doubling, but it took about 2 months. And look at the prior history, it took about 30% recovery in a matter of 1 month. So prior to it, the stock recovered close to 90%, but it took about 2 to 3 months. So from here, I don't see the price to recover back to 300 level in a matter of 1 month. But if at all, surprisingly, something happened exceptionally, I'm talking about the worst case. I'm not expecting things to go up. But on the worst case, if a market goes up, going beyond 350 is a less likely. So what ideally people do is they simply write 350 call option. Remember, in a high volatile scenario, when we have a 30 days to go, we may have some reasonable premium. But the point is it may be illiquid. So we want to know whether it is realistically possible or not. But I don't recommend blindly writing 350 call option because volatility is high and we have good number of days to go. So what I recommend you people to do is write 400 call option. But writing 400 call option still carries the same sort of risk. So what we did today is what I'm going to share it to you people today. So let me take this trade. You look at this particular one. Towards, this is 19th March 2020 is what we have traded. And as I said, we have taken April expiry India Bulls Housing Finance and the trades are pretty much filled. So you might have seen that. So first try to understand what we did. We sold 400 strike price. So I hope you guys can see that we sold 400 strike price. So by selling that, I am taking a premium of 3 rupees 25 paise. But you might have noticed now 2 instruments have sold. It means I am so confident that it will not go beyond 400, that every other person will agree. But the problem is, Murugan, if a market goes up in this given month, we may have MTM trouble. So how are you going to handle this particular case? So what I did is, by selling this option, I'm getting 3 rupees 25 paise. Again, I'm selling this particular one. So in total, I'm getting 6 rupees 50 paise. With that, I am buying 360 call option of 1 unit, which is 4 rupees 50 paise. So those who are already aware of option strategies will agree to this. It is actually called as bull call spread, but it is a ratio spread and it is a credit spread. So what happens is I am paying 4.5 from my packet for 360 call option, which is less likely to happen. So you may have a question that why are you buying when we have a less likely? No, I don't blindly write options. Sometimes it triggers a panic during the volatile scenario for 1 month. So I want to partially hedge my strategy. So I am buying this particular option 4.5 so that I get a peace of mind for next 1 month. So I've sold 2 options on top. in a way that I get 2 rupees back home today. So if a market remains at the same level, let's go back to the charts. If a market remains here at 89 or 150 or 200 for 1 month, I end up getting 2 rupees. The lot size is 1200. Let me tell you the margin it got today. I mean, the margin blocked is close to 60,000 rupees. I mean, 55,000 rupees is what the net margin blocked. But let's take a rough around 60,000 rupees. So if it is 60,000 rupees, I'm talking about 2 leg. And of course, I bought one. So I'm talking about the real margin locked in a given day. So what happens is, for 60,000 rupees of margin blocked, I end up getting 2 rupees into 1200. So it means 2,400 rupees is a net returns, which is close to 4% return on capital blocked. But I don't call that as a capital because we are not concerned about one trade. We are concerned about series of trades. So we generally recommend people to have a capital of 2 to 3 lakh rupees. For this particular trading strategy, ideal capital requirement is close to a lakh. Even if it is a case, 2% return for 1 month, it is that too, chances of making money is close to 99%. Now, why am I saying 99%? Because in 1 month, crossing 350 is a very less likely case. And Murugan, is it realistically possible? That is the reason why we thought of sharing something which we have traded. Remember, guys, we have not posted a profit after the trade. And I'm actually showing you a trade which we have just opened. I mean, the results will be known to us only after a month. So I'm not be sure that I will be making 100% guaranteed money. But I'm pretty much sure that 99% chances are there for me to make that 2,400 rupees, which is nothing but close to 4 to 2% based on the capital you allocate for the trade. And interestingly, by any chance this month, if it starts recovering towards 200 to 250, the 360 call option got a bright chance to make money. So remember, if a market goes anything above 360, remember the option what I've got with me. Anything above 360, this instrument will start making money for me till 400. Anything above 400, this will lose money, but anyway, I make money here. Whereas 400 will start losing money. So my break even comes at 440. But I got a maximum profit potential is close to 40 rupees into 1,200. So I can actually make money close to 40,000 rupees. Whereas the capital requirement for this trade is just about close to 60,000 rupees, as I shown some time back. But that 40,000 rupees money to be made, which is less likely to happen. But still, that cushion can make me better money to be made if the market shows some volatility on the upside. But what happens, Murugan, if this India Bulls Housing Finance comes to an end by this month? If it all crashes, what happens? I still take 2,400 rupees. So 99% chances are there that I get my interest at least back home. Okay. By any chance, if you see something you missed out, you better see this video once again from the beginning. Have some patience. I'm sure you will find it very interesting. But you may have another problem. Murugan, how do I learn this particular one? Let me tell you one thing. We are someone who got a very reasonable understanding with respect to futures and options. Right from trading strategies, understanding open interest, understanding option chains. You might have seen there are so many videos we have posted. So we have come up with a trading course. Currently it is available at Mumbai and we have our plans to come up with other locations based on requirement. So what we request you people to do is just go to EQSIS.com and you guys can actually find training under which we have option strategies. By any chance, if you have a solid understanding on option trading strategies, and if you really want to trade, but if you look for our assistance, we strongly recommend you to subscribe our option trading tips. So option trading tips, when you visit our website, which may be available at under trading tips, option trading tips. So what we actually do here is we provide an option strategy which provides high returns for the risk taken with a good probability. How we do it? Because as I said, we make sure that we optimize it on a directional perspective and we evaluate various option instruments and look for the right with good return for the risk taken. But remember one thing, this is not a kind of monthly package or annual package because any recommendation we provide which will effectively lock your capital for a month or a week. So we request you to consider a call-based subscription. So we have only three things for you people to do it. So we have index option strategies, which requires a capital of around 2 lakh rupees. Before subscribing any of our services, understand our product really well. Look at this. This requires a 2 lakh capital and solid understanding of options. If you are very new to market, if you are very new to option strategies, better not to subscribe this, and you better go to our option strategy workshop to learn before you come into this one. But if you're a pro who already trade in the markets looking for option strategy, you can use this particular one to subscribe. If you really want to attempt, just want to try one, you can just take one trading strategy from this. What we have shown today through this video is also one strategy, even it may also be available tomorrow. Mind your spread and trade it well. But if you want to subscribe one, want to personally get a phone call from us and want to trade, probably you can take a trial subscription, which all you have to pay is just about 500 rupees and test our services. But it requires some serious capital. So do read the requirements well, understand this. And as I said, the success ratio is quite high, and the downside risk also, we plan it well. And I'm a SEBI registered research analyst, so my license number can also be identified here. So whatever calls we provide is subject to market risk. Sometimes we actually provide you a fully hedged risk, wherein the downside may be limited. But most of the time we have partially hedged, wherein we have some downside risk may be pretty open. So if you are someone who is very serious about option trading strategies, do subscribe our services. I hope you might have got some real interesting learning today in terms of trading forward. Remember, trading is not that we have to be always active in terms of hitting your keyboard, buying, selling, buying. We are not a scalpers. We are someone who look for a nice trading opportunity. When you get a good one, hunt it and hold it for a while and look for a good return. Such trading style is what we recommend through option trading strategies. Even if you are a passive trader, I hope this probably looks really well. And we are also having plans to come up with something which is even more interesting. We may probably open to our existing clients. Thanks for watching this video all the way. If you have any interesting comments, do share it below in the comment section. Thanks for watching this video again till this minute.